Most people read silver like gold with a smaller price tag, but that is the fastest way to misread silver. Silver has two lives. One life sits in vaults, funds, coins, and bars. The other lives inside solar panels, electronics, factories, and supply chains. And when the data places these two lives together, silver becomes much more interesting than a price chart. In one 2026 window, silver fell 28%, but mostly moved with the metals market. In another window, silver rose 77% while gold rose 26%. That second move is where the real silver story begins. Here is the supply detail that makes silver memorable. Roughly 70 to 80% of mined silver comes as a byproduct of other metal mining. Copper, lead, zinc, gold. Think of sawdust. You do not make sawdust directly. Sawdust appears while lumber is being cut. Silver often works the same way. A lot of new silver appears while other metals are being mined. So silver supply is not like a tap that opens quickly when silver's own price moves. That is why silver's physical layer matters. When pressure changes, silver does not behave like a metal with a simple supply switch. Silver is also a smaller market than gold. That matters. When market pressure changes, it can land harder in silver. This is one reason silver often moves further. And today, fast systems can react quickly to price changes, spreads, and flows, but speed is not control. Algorithms do not control silver. They can make the reaction faster, while the metal still has a physical layer underneath. Now we need the filter. A big silver move alone is not enough. First ask, did silver move with the wider precious metals market? Or did silver move on its own? Only after that do we look under the chart. That order matters. Start with the move that looks dramatic. From 13th May to 12th June 2026, METLYZ historical data recorded silver falling 28.12%. Viewed alone, that number feels like a silver-specific story. But gold also fell 15.08% over the same dates. Both metals moved in the same direction. Silver moved further, as it often does. So this is the false lead. A big silver number should not be read alone. Hold that thought. The next window also looks like a metals move at first, but look closer, because the story is about to change. To find the real silver story, we have to see if silver moved differently from the rest of the market. That is exactly what happened here. Now compare that with the second case. From 18th December 2025 to 29th January 2026, METLYZ historical data recorded silver rising 77.39%. Gold rose too, by 26.50%. But this time, silver was not just a bigger version of gold's move. The gap became the story. Silver moved far beyond the benchmark. At one point during the day, silver reached about $121.6, then closed around $117.4. The exact level is not the main point. The separation is the point. This is where silver moved on its own. Once silver moved beyond the benchmark, we finally get permission to look under the chart, not to find one single cause, to see which silver-specific layers were visible around the move. That is where silver becomes different. The chart is only the surface. Under it, silver has a physical layer and an investment layer. Around this window, sources discussed several silver-specific conditions. 2025 was the fifth consecutive year where silver demand exceeded new supply. Silver-backed fund holdings were roughly 1.3 billion ounces. Coin and bar demand rose 14%, but factory and technology demand fell 3%. That caution matters. This was not a simple story of factories suddenly using more silver. Think of a reservoir. If a reservoir has been losing more than it receives for years, its level can still stay low, even when one outlet slows. That is the point. Silver's physical layer and investment layer were both visible around the window. This two-sided picture appeared before. In early 2020, METLYZ historical data recorded silver falling 32.02%. But at the same time, sources discussed strong physical demand. U.S. Mint Silver Eagle sales rose 545% in March 2020 compared with March 2019. Later in 2020, silver rose 67.03%, while silver-backed fund holdings reached about 1.25 billion ounces. These 2020 windows are historical support only, but they show the same lesson. The chart can be only half the story. So the rule is simple. A big silver move is not enough. First, classify the move. Did silver move with the wider precious metals market? Or did silver move on its own? If it moved with the market, a silver-only explanation can add noise. But when silver moves beyond the benchmark, the layer under the chart becomes worth examining. Inventories, funds, coins and bars, factory and technology demand, byproduct supply. That is why silver is different. It is a financial vault and an industrial factory trying to occupy the same market. None of this points to where silver goes next. This is not investment advice. It is a way to read silver more carefully. When the next big silver move appears, the first question should be, was this the market moving or silver moving on its own? And if you want the latest weekly market recap, watch our upcoming METLYZ market recap video this Saturday. METLYZ explains metals through historical data, not predictions.